Hello and welcome to Skipton Talks. We'll be talking today about empowering first-time buyers. And as a bit of a first, we're coming to you live from the studio in the Bailey. I'm looking around and no one's giving me exasperated faces, so we must be live. I'm delighted to have a couple of guests as well on our one show settee. So I've got Lucy Lewis, who's our first-time buyer lead for Skipton, and Joe Wall, BDM for the Northwest. And we're delighted that you've joined us this morning. One advantage of doing this live is you can interact with us. So if we're probably going to be talking for the next 30 minutes, but if you've got a question or a comment you'd like to add, you can pop it into the chat. And don't worry if someone's asked you a question, you can like other people's questions. And what we'll hopefully do when we get a bit of time at the end is we'll start taking some questions, and maybe the most popular ones we'll have time for, and hopefully get an answer from the brains of the outfit that are sat on the settee with us this morning. One question you might have is about CPD certificates. So if you've joined this morning, we'll get those certificates to you. And as I say, we're glad that you've joined us. So without further ado, I suppose, Lucy, as first-time buyer lead, you ought to get the first question. Why the focus on first-time buyers? Why are they important to us?
Well, I guess the best place to start is the fact that we're a building society. So we're a mutual, we're owned by our members, formed just over 170 years ago, with two fundamental purposes. So to give people a safe place to keep their money and to help people to buy a home. And these haven't changed over the last 170 years. Our purposes are still absolutely the same. So for me, first-time buyers is just the natural extension from that, really. What we have done is we've kind of set it as a target across the business. So we are all very much focused, and that's across the whole homes side of the business. So products, credit risk, business development. We're very much focused in helping first-time buyers to be able to get that first step on the ladder and to be able to buy their first home. So last year, 36% of our new lending went to first-time buyers. Obviously, we've got targets to increase that. This year, our target is to get 40% of all of our lending to be for first-time buyers. And you've seen that in a lot of the different things that we've been able to do and some of the new criteria and new policy changes that we've made.
Okay. And Joe, vital for us as a lender, is it an obvious thing to say that for a broker, they're vital to brokers as well?
Well, I'm speaking for brokers here, so I'm assuming, but from conversations I've had with brokers, of course, first-time buyers are the lifeblood of the housing market, and they're most likely to need advice, of course, Derek.
Yeah.
So really important to brokers, and the conversations I have around, the challenges, because there are challenges, and we're going to talk about some of those today, I know, and how we can help with those challenges. Affordability is obviously a really big challenge for first-time buyers, and source of deposit, and there's lots of conversations around that. So I know that first-time buyers are really important to brokers.
Yeah. So we've established first-time buyers are fundamental to the industry that we work in, Lucy. So paint us a picture, perhaps, of the challenges that are out there for first-time buyers getting onto the property ladder.
Yeah, I guess kind of just going back to the fact that they are fundamental. Obviously, you need first-time buyers to be able to buy those first homes, to allow people to then sell their first home and buy their second home. So we absolutely need it. It's important for the economy, but it's also important to keep the house buying market moving as well, which is really important for us and for consumer confidence. So it's a tough time for first-time buyers.
Yeah, so we've seen a building society report was particularly around first-time buyers and the challenges. And I'm going to sound like my dad here, but when I was a first-time buyer, I remember a mortgage statement 14.75 and 12%. But I think the building society report says probably it's the worst or the most difficult time for the last 70 years. Yeah,
that's right. So it's the reports by the Building Societies Association specifically looking at first-time buyers and the challenges they're facing. And it does indeed say that it's possibly the most challenging time that it has been for the last 70 years. And I think, yes, obviously, mortgage rates used to be higher, but there's some interesting stats. So house prices have increased since 1997 by 4.5 times, but actually wages have only doubled. So you can see there's no direct correlation between the two. I think partly as interest rates had reduced, then house prices, people were able to afford more, and therefore house prices had gone up. Yeah. Obviously, when you bought your first mortgage, I can't imagine we were looking at 5.5 times income. I would imagine it was kind of 3 times or less. Yeah. So things have definitely changed. As Joe mentioned, two key issues that are facing first-time buyers, two key challenges. One is raising deposits, and the second is the cost of repaying a mortgage. And we have seen that have an effect to the number of first-time buyers in the market.
Yeah.
So at peak, we had 600,000 first-time buyers every year looking to buy their first home, and now it's much closer to 300,000.
Right, okay.
So it has reduced substantially.
And Joe, you've mentioned, we've got you here as the voice of the broker. You deal with brokers every day. I presume their job is much harder as a broker now, finding a place or finding a lender for a potential first-time buyer that walks through the door.
It's a real challenge, there's no doubt about it. Yeah. And they're very innovative, of course, brokers, and they find solutions. And luckily, there are lots of solutions out there for first-time buyers, but it's the need for advice.
Yeah.
Because on your own, as a first-time buyer, I wouldn't want to do it.
Yeah.
Trying to find a mortgage and trying to find a solution, really, really difficult. So the broker is key, and you can see that from the number of, if you look at the market stats, what we at about 80% of business through the intermediary market. So you can really see where the demand for advice is. Okay.
So we talked about possible solutions, the two sort of fundamental challenges for first-time buyers. We've already mentioned affordability, which we'll come on to. We've mentioned deposit. Lucy, the obvious place for us, certainly at Skipton, to start would be track record. Talk to us about how that's come on, and perhaps we've made some enhancements, haven't we?
Yeah, we have. Is it worth just digging a little bit more into affordability as well?
Sure, I think we're going to come on to affordability when we talk about the joint borrower sole proprietor. But yeah, if we have a look at the track record for us. If you can.
Okay, perfect. So track record mortgage is something we brought out in May last year, and the aim with it is very much to be able to help renters who are stuck in their rental properties because they've not been able to afford to save for a deposit for their property. So as I say, launched May last year. It was originally launched for first-time buyers only. So obviously it was new, it was unique. We didn't quite know what the demand would be. So first-time buyers only, but we quickly learned from feedback from both customers and brokers that actually there were other people also who were kind of stuck in that rental cycle, who maybe owned a property, who'd inherited a property, but had been renting for a number of years. So we changed the criteria there. So it was for anybody who'd not owned a property in the last 3 years. And delighted that in the last couple of weeks, we've been able to announce that actually we've enhanced it even more. So it is for people who have got have no deposit, so can do up to 100%. And we've been able to enhance that now, so it's also now available for people who are looking to buy a new build flat, which is new. We've been able to extend the term, so we've gone from 35 to 40 years as a maximum term. We've improved it by allowing people to buy shared ownership properties on it as well, and we've also looked at the affordability. So we had a bit of feedback that in some cases, because we need the rental to be, so the rental costs that people were paying previously to be no more than the mortgage payment, we've been able to look at that, and in some cases now we'll be able to allow people to pay, so their new mortgage payment would be able to be 120% of the rental. So some really positive changes from us.
And for those watching, a lot of those enhancements are from feedback from brokers as to when they've tried to use track records. Some of the enhancements we could make have been fed by the feedback we've had. So we certainly encourage feedback and hopefully showing us a lender that can be fairly agile. Joe, in the Blue Peter tradition, you've got a case study you've prepared for us, maybe just to bring to life how track record has helped.
I have, yeah, absolutely. And I think this example demonstrates how it can give a customer that financial independence and not have to lean on parents. So the situation was this young lady had just come out of a separation with a partner, a few debts, so whatever savings she had gone towards repaying those debts to put her in a better position, of course. She'd already been told, I think, by her bank that she needed to come up with a 5% deposit. So by the time she got to the broker, she was, I'm a lost cause. I can't do this. I've got no deposit. The broker talked her through the solution that is a track record mortgage for those that have got the 12-month track record of rental within the last 18 months. Talked her through the affordability side of that, checked that all out, and it did meet criteria. for her, it's great because her parents had said to her, look, we can give you some money. We want to help you. We want to help you get into your first home and sort your life out. But it would have meant them depleting their retirements and life savings to help her to do that. And she didn't want to put her parents in that financial position. So this is a real lifesaver for that customer, not having to lean on her parents, able to stand on her own 2 feet, coming out of a sticky relationship, and now able to, start a new life in a new home. That's the real human side of what a product like Track Record can do. Yeah,
and for those perhaps who haven't seen our enhancements, reach out to your local BDM. The enhancements we've made, basically our attempt is to try and get more people eligible for that particular proposition. I did throw Lucy a little bit rogue with some slides earlier. We're going to come on to talk about deposit. We're going to come on to affordability challenges. One thing we've done recently, Lucy, as a Skipton group, is we've launched an affordability index. So before we go into some solutions as far as our proposition, talk to us about the Skipton Group Index and how that sort of tracks affordability.
So I guess we're blessed really at Skipton Group because we're such a large group. So we've kind of got our fingers in lots of different pots. So there's the lending side, obviously through the building society. There's an estate agency side. There's a survey and valuation side. What this gives us is an enormous amount of data and insights into actually what is going on in the market. So what we've been able to do as a group is we've used our data, and we've worked with, so we've taken the ONS data as well, and we've worked with Oxford Economics, and we've actually been able to produce something called, that we're calling an affordability index. And it gives you a really good overview of not only the affordability of people being able to buy a property at outset, but also the affordability of people being able to live in that property and maintain that property, because obviously that's another challenge. It wasn't so difficult when mortgage rates were lower. Then obviously the main cost was buying the initial property and the deposit and that outlay. But actually, challenging times, mortgage rates have gone up. The cost of living has had an impact on utility bills, and also there's part of the consideration as to how much that property will cost when people are living in it. And we've had some really interesting information that's come out of it. So it's shown us that approximately only 1 in 8 first-time buyers are able to afford to buy a property in their local area, which is really low, isn't it?
It's
1 in 8.
Yeah.
I mean, obviously that varies in different areas of the country, but you can see that on our affordability index. Almost 80% of first-time buyers have insufficient savings to put down for the deposit for their first property. And obviously we've seen lots of talk in the industry about the Bank of Mum and Dad, Bank of Family, people being able to borrow deposits from family and friends, and then the people that are not able to raise a deposit. And that's one of the things that we hoped to be able to solve with our Track Record product. And also it's brought out that nearly 4 in 10 people, so 45%, 4 in 10 people, spend 45% of their income or more just on essential housing costs.
Right.
So that's an enormous amount of money, and obviously that talks to the affordability of the property going forwards once you've actually bought the initial property. So really important insights, I think, from us as a group, and obviously we'll be continuing to develop that. But what that also gives us the opportunity to do is to talk to other people in the industry, and to talk to policymakers, and to talk to government about what needs to change and how we together can make an impact to help more first-time buyers be able to buy property, and also to help kind of the second steppers to be able to buy that property as well, because they're important.
So that index going forward, I suppose that index going up or down is going to say that it's going to get harder or easier for affordability. Joe, we talked about the Skipton Group using this as a high level, but I think at a broker level, you've seen some brokers using this with their clients. You talked about the value of advice, etc.
Yeah, absolutely. It's not a tool, obviously, that brokers will use regularly every day. It's not an affordability calculator, but it is a rich set of data and statistics that can really help inform a broker about the challenges facing the customers that come in through the door. And whilst they'll have a really good idea about those challenges because they're dealing with those customers every day, this is hard facts about the difficulty for first-time buyers in their area to get onto the property ladder. And if you ask any brokers on this call, I'm sure they'll say to you, we're not just about getting a customer a mortgage, we're about holding their hand through the housing transaction, telling them what's going to happen next. And also, those customers that come in that are not mortgage ready yet, they're the link to say, look, you know, here, this is what you need to do, Mr. Customer, to get yourself mortgage ready. And this is a really rich vein of data for those customers, for those brokers. And I've already mentioned that, of course, first-time buyers are really important to brokers, and this emphasises why these customers really need advice.
Yeah.
You know, if 1 in 8 is in a position to buy, if a broker sat in front of one of those 1 in 8, and you were talking about, you know, looking at what happens in future years, well, I think the affordability gets worse in a lot of areas in future years.
Yeah.
So if you've got a customer sat in front of you can afford to buy now, this is a really good tool to say, look, you know, this could get worse for you.
Yeah.
So is now the right time to buy? Potentially, yes.
And certainly feedback when I've been out and about, some brokers have been using it as getting that commitment to buy going forward. If you're watching this and you haven't had a look at this yet, one of my colleagues is going to put a link to the affordability index on our Skipton group page. It is the sort of tool that you can go in and have a play about with it and see what it's telling you. But as Joe's already mentioned, some really good sort of snapshots of stats that you can talk to your potential first-time buyer about. So that's affordability in a sort of overall aspect. Lucy, if we're going to talk about affordability, we've got to talk about our income booster, which formerly known as JBSP, but certainly under Consumer Duty, a real drive from us to make things a bit more straightforward in layman's terms. So talk to us about our income boost proposition, which helps with affordability for potential first-time buyers.
Yeah, and it's a really important kind of tool to have in your pocket, I suppose, as a broker and certainly as a lender as well. So as you say, income booster, joint borrower sole proprietor, depending on how you know it. But what it allows people to do is have one borrower on the mortgage who owns a property and up to 3 supporting borrowers who help them, so help with the affordability, their incomes can count towards the mortgage, that they don't actually go on the property deeds. So it enables people to have, you know, your mum and dad helping you to buy a property. It could be your godparents. It could be your brothers and sisters. The nice thing about your income booster for Skipton is actually you don't have to have a family relationship. So in some circumstances, we've seen work colleagues do it or nurses buying together. So there's lots of different permutations. But essentially, it allows people to give you a little bit of an affordability boost, so to kind of boost your income and have more people on property. So it's been a really, really popular product.
Yeah, and certainly from my aspect, Joe, you mentioned earlier about brokers are innovative themselves, and certainly when we launched Income Booster, I always thought as first-time buyers, but brokers get our proposition and are able to be quite innovative with it. And again, I think we've got a case study from you again to bring this to life.
Of course. Yeah. I see Income Booster as kind of a solution to a lot of potential challenges for buyers. It's not just about you know, parents helping kids get on the property ladder. It can be used in other ways. The example I've got is quite a complex one, really. So a young couple looking to buy together. He's come out of a separation, so and he's still party to the marital home. So he's still on a mortgage with his partner. They've managed to save up a deposit of 5%. They want to buy a new build house. It's all ticking the boxes for Skipton all the way through this. So 95% new build house. They've saved deposit up. They go and see the broker. The broker's saying, we might have an issue here because your deposit could potentially get wiped out by the fact that you're going to have to pay a 3% surcharge on stamp duty. Because whilst you, miss, are a first-time buyer, your partner isn't classed as a first-time buyer anymore because he's still got a mortgage. So Income Booster in this case was potentially, it was used to retain the first-time buyer's status as a first-time buyer so that she wouldn't be burdened with the fact that he's had a relationship previously, and why should she be? And why should she have to pay a 3% surcharge on stamp duty? So a joint mortgage was applied for on an income booster basis. He was going to live in the property. So that's a unique bit of policy with Skipton, that we will allow all applicants to reside in the property. He has to take independent legal advice, of course. It's got to be explained to him by a solicitor what he's getting into. So he's going to be jointly and severally liable for a debt, but he won't have any rights over the property. But for those customers, it's the difference between them being able to start their new life together or not, because the increased stamp duty would have just taken out the deposit completely. Good case, good incomes, both police officers. So affordability-wise, even with the mortgage in the background, no problem at all. But it was just that little issue about what are we going to do about this, because we're going to have to pay this stamp duty and it's going to cost us too much.
Do you know what? I think that really underlines the value of a mortgage broker, because there is absolutely no way that a customer on the street would think, hang on a minute, what I'm going to need is a joint borrower sole proprietor mortgage, because then I can do this and I can do that. So value of advice here is key. You know, obviously people pay for advice, but rightly so, because mortgage brokers do an incredibly good job at helping people to get the best mortgage for their particular circumstances. And that's true individual advice, isn't it?
It is. It's a solution finder. The product is a solution finder.
And I think you know, the case study you brought, Joe, is a perfect example of a lender having an agile proposition, a flexible proposition, the broker using their experience, understanding of the lenders that are out there, and coming up with that solution. Again, just as a plug, we did do a podcast recently on our income booster, specifically about those sort of things. So most people know what a JBSP is and how it works. If you want to have a look at our podcast, which again is on all the main streaming sites, we'll put a link on there as well. But I encourage you to watch that, because what we've tried to do with that podcast is not concentrating so much on what JBSP is, but actually how our agile and flexible proposition, as Lucy's mentioned, doesn't even need to be a family relationship. So on that podcast, we talk about various examples that you can use because of the flexibility and the agility of our proposition, how you as a broker can use that proposition, as Joe said, to come up with a solution that perhaps, as Lucy said, a customer themselves may not have come across that. So appreciate that case study as well, Joe. Because it is live, the person running the slides is glaring at me as well. I've gone a little bit all over. We've got the affordability on Income Booster. We've got track record for the zero deposit. Joe, there's a couple of other examples. If someone's not eligible for track record, there's a couple of other ways we can help as well, can't we?
There is, yeah. I mean, there's right to buy and right to acquire, for example, are schemes that have been around for a long, long time, where the customer potentially doesn't have to put any deposit in. And of course, we will lend to those customers on those schemes, and we'll lend 100% of the discounted purchase price available. We can also accept a gifted equity from a landlord. So that makes perfect sense when we're talking about customers, you know, wanting to do a 100% mortgage. They're in rental at the moment. If they can't quite meet the track record criteria, because perhaps, you know, the rental calculations stymieing the amount they can borrow, then potentially if their landlord's happy to gift them 5% equity, then they're in the same boat. No deposit down, 95% lending, slightly better product. So it's another option for those customers. And same with buying from family, exactly the same rules apply. So there are other options, and of course there are other options available across the industry as well, but there are other options available through Skipton.
Fine. So hopefully we've given you a few examples there, specifically around the challenges we mentioned about affordability or a challenge around deposit. If we've given you some reasons to use Skipton, Joe, the good news is, well, we've got some particular products that are suitable for first-time buyer.
Yeah, we have launched some new products. We've got some with a cashback, £1,500 cashback, just to help, because we know obviously as a first-time buyer you're cash strapped. So that's going to help you in those early days. Buy a nice telly, that's the best thing to do. Up to 40 years on your term. We're seeing more of that, obviously. We're seeing term push out because of cost of living, etc. We've got the income booster, which we've already talked about. There's no completion fee on some of our products, so that will make it easier for customers. Lots of fixed rate options. If customers got a LISA, a lifetime ISA, with us, then we give them an additional £250 so they can buy a better television. And in certain circumstances where the income is allowable, we'll go up to 5.5 times, and that's up to and including 90% loan to value. So that's slightly different to a lot of the market out there at the moment. Free standard valuations, as we always do, and up to, what does that say? I'm reading something here, but I can't read it. And we give you a discount as well. If you want an upgraded survey, so you don't want just the lender survey, we can give you a discount through Connells.
Yeah.
So, and in certain circumstances it can be up to 40%, so it's quite a significant discount.
Right.
So that can help you first-time buyers as well.
Okay, I'm kind of thinking we might have talked long enough, looking at the clock, etc. We have got some questions coming through, so I'll maybe switch to some questions. Get yourselves ready, thinking caps on. As I say, let's see what we've had coming through. Probably thinking they're ranked in the most popular ones, and I'm always slightly concerned when the person calls themselves anonymous, but the first question is from anonymous. If Dad needs to live in the property but his age won't work, is there any way to add him on still? So, Joe, does that make sense to you?
It does. So I assume we're talking about income booster.
Yeah, it doesn't say, but I presume we are, yeah.
The only potential issue you've got here, if Dad can live in the property, that's not a problem, because we'll let all applicants reside in the property. Your potential obstacle or challenge here is if you're using Dad's income, so you need Dad's income, then we will stick to our lending into retirement rules, basically. So it depends on how old Dad is now and what term they require. But if we're not using any income for Dad, then Dad's age will not restrict the term.
Right, okay. Another question is, one of the enhancements we have made under the track record is the definition of household to household, so we can be a bit more flexible. Is that, so a question has been, how do we define household to household? So I presume they're meaning the enhancements we've made on track record.
Lucy?
Yeah. So initially when we launched track record, we were quite strict about our household criteria, partly because it was new to the market, and to be entirely honest, we didn't know what to expect. So we were quite rigid in the fact that, you know, it needed to be, if you'd had 2 people renting a property, then those 2 people needed to be moving into the property that they were going to have the track record mortgage on. What we've done now is we've just been a bit more specific about the kind of situations outside of household to household that we will accept. So, for example, if you have 2 people who are renting separately, what they're able to do is they can add the rent together, and they can both use the total amount of that rent, and as long as the mortgage payment is no more than potentially up to 120% of that, then they would be able to have that mortgage, assuming obviously that they meet our affordability criteria and things like that. So we've just been a little bit more specific about the kind of scenarios that we can and can't accept. And what we have done as part of our track record changes, we've updated our FAQs. So you'll be able to find them all on the Skipton for Intermediaries site. So it's got a bit more information on there.
Fine, okay. Probably a more practical one, Joe. Someone's asking, how do I calculate affordability for track record?
Right, so we've amalgamated the 2 calculators. So brokers will know that we were using the standard affordability calculator and our track record rental calculator. Those 2 have now been amalgamated. So you will notice that when you enter the loan amount and the purchase price, the system will automatically recognise whether you're above 95% or not. If you are, it will open up a box so you can enter your rent. But the key thing here is do not forget to enter the rate of the product. You can skip through it without entering the rate of the product, but you won't get an accurate affordability calculation. So just make sure you enter the rate.
Okay. Track record question, and it's on eligibility. For track record, could you get this if you've previously owned a home with someone else but not bought on your own?
Well, it depends when you owned the property. That's key. So track record, as I said earlier, is open for anybody who's not owned a home within the last 3 years. So as long as you have previously owned a home and it was longer than 3 years ago, then yes, absolutely, you would be eligible.
Fine, okay. Another question, maybe one for yourself, Joe. Can I recommend income booster for customers buying a shared ownership property?
You can't, unfortunately. So it's not available on schemes.
Yeah.
So you couldn't use it with right to buy, you couldn't use it with buy to let, and you can't use it with shared ownership.
Right, okay. Let's go through here. this is quite a long question, so hopefully, let's see. With a track record product, if a single applicant previously lived with someone else and shared the rent, but now rents on their own, would you use the rent for the lower figure when the person shared, as this was in the last 12 months, or would you accept the new rent which the person has been paying for the last 2 months? So it sounds to me the status has changed where the rental payment have changed, but so that track record of the last 12 months, Joe, that sounds like a BDM coal face kind of question.
It does, doesn't it?
Yeah.
So they've got, let me get this right then, so they've got a 12-month track record of rental.
But it was previously...
But previously it was shared rent.
Yeah. And now rent's on their own.
Yeah, I think we would want 12 months rental history of that customer paying the rent on their own before we would consider track record.
Okay. Next question. I have some customers where their rent and utilities are included in one monthly payment. How does this work as far as affordability is concerned? I'm looking at you, Joel.
You are looking.
Yeah. You're glad you came, aren't you?
I don't know, what do you think, Derek? So all the utilities, etc., are included within the rent
One
payment?
monthly payment, yeah.
Right, we would need to split that out.
Fine.
So we'd need to know what they'd been paying in rent. I don't know how easy that would be. In some cases, I've seen this before, and it's simple to split it out. In other cases, it isn't. But we would need to know what the rent is on its own so that we can then calculate what the customer can borrow.
Right, okay, that's good clarification. Let's go on next one. Is Income Booster available on remortgages? That's a question from John. Yes,
it is.
Yeah.
So it's available for purchase and remortgage. I know not all lenders will allow you to do a remortgage, but yeah, we saw quite a lot of it last year, didn't we?
Yeah.
Income Booster remortgage business. So yes, absolutely, you can do that.
So hopefully that's a really straightforward answer to your question. Is it worth elaborating, Joe, that actually with Income Booster, obviously we've mentioned how it's a better way to increase someone's borrowing power, if you like, but the criteria and our propositions pretty much across, you know, it fits with, it doesn't have its own separate set of criteria, does it, in the main sense? You know,
no,
like,
absolutely not. Yeah. No. Yeah. So it's available for remortgage. We have seen customers, you know, where they want to perhaps, you know, do some improvements to the property and are realising that they don't meet affordability, so they need some help with that. Or there's always those, you know, separations, for example, where they're remortgaging and looking to add a parent on to help them to take the mortgage over. So yeah, absolutely. Lots of scenarios where you can use it as a remortgage.
Yeah, we definitely saw a bit more of it last year, didn't we, with the cost of living crisis. So.
Yeah.
I think you may have touched on this, Joe, but maybe just to clarify, one of the questions coming through is if, say, Dad is providing the deposit, it's just flick, but as well as being party to the mortgage, is this acceptable?
Yes. Yeah. I'm assuming we're talking about Income Booster here.
Presume we are, yeah.
Yes, absolutely fine. Because he's party to the mortgage, he's bound by the terms of the mortgage conditions, and therefore, even if he was to live in the property, that deposit is acceptable.
Fine, okay. And I think one of the comments we've just made has probably triggered an additional question from someone again who's called Anonymous. I think it's probably been triggered by the fact we talked about splitting the rent from maybe the utilities, etc. But we have had a question, what additional documents do I have to provide for track records? So we're quite a fairly straightforward lender for normal submission, but if you're submitting a track record application, what additional documents do we require?
So the only additional evidence we require is your evidence of your 12 months rental payments. We don't want 12 months bank statements because it's too much paper. If the customer's got online banking, then they can do a transaction search, brilliant, because that will give us the 12 months. Yeah. If they haven't got that facility, if they can get a breakdown from the property management company that are looking after the rent, that's fine. We'll accept that.
Fine. So, again, a good news answer, because we don't want to be too onerous if we're talking about the history of them paying rent. If they can split it down, we only want to see that. We don't need 12 months worth of bank
statements. I think it's worth noting that you know, auto income verification is still available for customers borrowing 100% loan to value. So I've seen cases where all we've asked for is proof of the rental, because we've managed to auto income verify the customer, and all we've needed is that one document to prove the rent.
Yeah, I mean, it might be the right time to stress as well. I've said we're not too onerous as a lender. Joe's mentioned about the tech we have in the background with auto income verification. Certainly the pleas we always take the opportunity to do is just send us what I call it the shopping list. but really just send us what's on the shopping list. That makes their applications go through far quicker and far more effectively. So that's certainly top tip.
Before we move on, Derek, let me just jump into the track record, because what we said is we need proof of the last 12 months of rental, but obviously we take an average of the last 6 months that people have been paying. So I think it's quite important to note. So if somebody's rental cost has gone up within the last 12 months, so the last 8 months have been higher, then we'll take an average of those last 6 months. So it's a good way to have a little bit more affordability if rents jumped.
Yeah.
Fine, okay. And maybe just time for one more. We're kind of expecting a question around this, but re-income booster, can we apply on an interest-only basis?
You can.
Yeah.
As long as you meet the interest-only criteria.
Yeah.
So you meet the minimum income requirement, you're not above the maximum loan to value, and there's a suitable repayment strategy in place, then you can apply on an interest-only basis.
So another example really of income booster, as I say, great proposition, really agile, really flexible. Joe's talked about brokers being innovative with it, but in principle, it complies with the same
Exactly the same
criteria,
policy.
same policy through all of the rest of our stuff. So we're conscious that brokers, you've got busy days. We hope that joining us this morning has added some value. Certainly from a service perspective, if you want any more information, you can visit our website, follow us on LinkedIn. One thing I'd want to point out, we've got a telephone number there. If you call through to the real people at Skipton, we're good at answering the phones really quickly, but we've added an extra option. So it fits in really nicely with our first time buyer proposition. But option 1 is we'll a dedicated team to take your first time buyer inquiry. So hopefully that just shows the priority we're putting on first time buyers with Skipton. So all the other options are there, but option 1 would be for first time buyers. We'd also shout out to our web chat team as well. Real people at the other end of web chat will happily talk to you as well about the cases that you've got. And finally on social media, if social media is your thing, you can direct mail us. We've got a social media team if you're happier dealing through that way. So various ways to contact us. I'm sure Joe, being one of them, would point out that you've got your BDM as well. They can help support your business and go into a bit more detail. The links we've got in the chat about our affordability index as well, and the podcast that we've done as well. We get good feedback from our Skipton Talks. It always seems to talk about the things that are important to you. That's because we take the feedback from. So if you're watching and you think there's other things we should be talking about, again, we'd appreciate the feedback we've had on that. But finally, I just want to say thank you to Joe and Lucy for joining us and being the brains of the outfit this morning. Thank you to yourself for taking time out of your busy day. And we hope to be hearing from you about other things we can talk about. So thanks for your time this morning.